very warm welcome to CxO Disruptors. This is our series dedicated to inspiring innovation at a time when it's much needed. We achieve this by speaking with people who are trailblazing in their respective fields. We dig deep to gain insight into the complex challenges we face as a society and in business, whilst defining the viable solutions, particularly leaning on technology. I'm Sandeep Sujani, your host, and today we're delighted to have Michael Berns, AI and Fintech leader at PwC, who joins me today from Frankfurt. Today we'll be looking at how AI helps financial services firms to manage risk and offer improved customer experiences. Thanks so much for joining us today. Michael, great to have you this morning. Perhaps before we dive into the detail, and I know you have some fantastic experiences to talk about in terms of the application of AI in financial services, for those watching, could you help us take a step back and help us to look at what is AI and how do we think about it before we dive in?
Great. So when we say AI, it's quite important to realize that this is a term that has been around since the 1950s and originally defined as the science and engineering of making intelligent machines. Now, a lot of things have changed in our capabilities in terms of the setup and what we can actually build since the 1950s, but one thing still remains the same, and that is that the term intelligence is difficult to define. When you think about it, it could be the emotional, it could be the social, it could be a lot of different aspects of what intelligence means. But what we can say is that the artificial part or the solution that is trying to act as a human, that part is easy to define, the other part not so easy. And what that means is that when you listen to some experts in the field is that sometimes the definitions of terms like machine learning, artificial intelligence, deep learning, and so on can overlap. So for you as a listener, just be aware that there is a number of different terms, not always completely separate from each other, sometimes overlapping, that all deal with machines and data. So for me, artificial intelligence today is trying to achieve that a solution can kind of be excellent in one particular use case. That doesn't mean that that solution will think like a human overall. So if you take it out of that specific context, it's very likely that this solution will have no chance of emulating being a human. So as some colleagues would say, we are always 20 years away from artificial general intelligence, the one that, you know, depending on which predictions you listen to, might either take over the world, destroy it, or make a fundamental change for the good.
I know you've had a lot of experience with trying to utilize AI with specific use cases in financial services firms. Could you talk us through some of or one or two of the top use cases from your perspective? What were the problems that you saw, and how did AI help to arrive at a better solution to either manage risk, drive up profits, or manage stakeholders better?
After the financial crisis, when the global regulators picked up on a number of scandals. One, of course, probably the largest one in terms of impact is LIBOR, the global benchmark where you have trillions worth of products being tied to, and yet there was a small group of maybe 10 to 20 people manipulating this global benchmark. So the regulator caught on to this. At the same time, also looking into FX manipulation, anti-money laundering, and some other big use cases. And when you think about it, maybe the banks were not having a big pool and budget at the time for innovation, but they did have very large budgets in terms of regulatory aspects and dealing with some of the outfall from this. So when you have fines from 200 million to $1 billion per institution, and sometimes fined several years in succession, for some of that, it became a kind of fight for survival, you could say, or a fight for, am I going to be a merger target? Do I have to shut down business units in the US? And so on. So there were some interesting times, 7-8 years ago. And that caused some of them to look into AI not for innovation, but rather an outside solution to deal with their internal control problems in terms of compliance, anti-money laundering, and these areas. I had the honor to kind of implement AI platforms for about 5 of the largest 10 banks in the world at the time. For some of them, that being one of the first applications that went onto their big data Hadoop cluster. So from that perspective, it was maybe a reactionary move to start with, but there was a realization several years later that, when you have the conversations, when you have the insights from the market, when you have access to social media, you have like a treasure trove. Yeah, you could say data is the new oil, or data is the new gold. It doesn't really matter, but what has to be clear is that there is a significant value in data and what you can do with it. And with the help of artificial intelligence, organizations such as the largest banks they have a chance to leverage these insights, whether it's helping them in terms of trading arbitrage, insights from research, market input, but also to control themselves better, finding patterns in the communication, trying to prevent the next fraud case or the next insider dealing or front running case.
How would you guide the listeners to think about communicating the journey that you're proposing that these teams go on to incorporate AI around financial crime or financial fraud?
Yeah, I guess we can go back some 400 years to Shakespeare, or to something like know thyself, right? The organization should be aware of the skills that they already have in-house to be able to say, is that something that we really need from the outside? Probably they will need a lot of the different components, but to kind of build internal interest from people that either have programming skills, be it Python, people that want to build on the digital transformation in terms of product management, product owners, and so on, to be able to really make the most of what they get from the vendors and consultants from the outside. And in terms of the communication, depending on different size of clients, and I had the honor to work with some of the bulge bracket investment banks, but also some of the local banks, also back here in Germany with some of the smaller institutions. I think it should be clear to all of them that this journey towards digital disruption, towards artificial intelligence, it's one that will definitely pay out dividends, but those might not be there in the first year.
Could you give your perspective on how do you think banks are doing now in terms of having the right sets of data available and the skill sets available in order to maximize the usage of the data that's available? Where do you think how are we doing?
I think this is still a question where you would have a different answers depending on where you sit in Europe, or depending where you sit on the globe. I feel UK is definitely ahead of Germany in this, in terms of the number of skills available, the startups available in that field, the companies available, the also of larger size in terms of unicorn status and so on. So that's very clear. But have we kind of reached the level of where China or US is performing at, where in terms of the world leading research, about 25% of that is now coming out of China. So when you think from the position where they started it 10 years ago, to go in with some larger investments and then not only creating the quantity of research, but also world leading research in that field, that's a tremendous achievement. And I think where we in Europe could do better is to have more shared initiatives, to continue some research sharing with the UK, of course, and to make this a a prime point of focus to deal with AI. I feel that the governments here, unlike UK, for example, they have not made it a discussion point in House of Lords. I was attending the All Parliamentary Group for AI there, or they have not made it like a key element of their policy. So I think they're still finding the way.